Welcome to the HC Insider Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. Today we're talking biofuels on the edge. Over the long term, they're crucial to the energy transition, figuring in most decarbonisation plans in transportation. However, 2023 has highlighted some of the real challenges that they can face, how they're dependent on crop yields in a year when Argentina's yield of soybeans is down 50%, and what would happen when prices rise and start impacting food prices, but also in terms of regulation and consumer demand and choices. Our guest is Walter Cronin. Walter spent a long career in the agri sector. He was formerly the Chief Commercial Officer at Green Plains, and is now working with a number of investors pursuing the building of oilseed processing capability around the world. I also want to note that we have an upcoming HC Insider podcast live event, this time on September the 14th in central London. Hosted by Onyx Capital Group, we're discussing the future of oil derivatives and who really prices oil today. The panel consists of myself moderating, Greg Newman, CEO of Onyx Capital Group, Savas Manousos, former head of trading at Cepsa, and former guests Kurt Chapman and Tor Sveland, founder and CEO of Sveland Capital. The event is free, but invitation only, and spaces are limited. So if you have interest in coming along and seeing the panel, please do email me or reach out via LinkedIn. If not, you will be able to hear the panel discussion on a future episode of the podcast. As always, you can really support the show by leaving a positive review on the platform you're listening on, whether that's on Spotify or Apple. It really does kick those algorithms into gear, broaden the audience, and continue to allow us to get great guests. You can also find us on YouTube, and we welcome comments on content or potential guests for future episodes. And finally, I hope you enjoy the episode. Walter, welcome back to the show. So last year we did an episode on kind of almost a 101, but very much a lay of the land across the biofuels space. So I would encourage listeners to go back and listen to that for some of the more sort of basic concepts, if you'd like, around ethanol, renewable diesel, sustainable aviation fuel, and even biomass as well. We've got you back on because there's, as partly as an update to what's going on in the market, but the markets are also, or the whole sector is kind of somewhat on the edge for a variety of reasons, both agricultural in terms of crop supply, in terms of policy, in terms of global demand and consumer behavior and so forth. So that's what we're going to weave through today. But let's sort of start on the grains and oilseeds crop and market, because this is sort of perhaps a tale that as yet has rather flown under the radar, and it's a story of environmental impact on crops around the world that should, you're going to argue, is not priced into the risk at the moment. So let's start there. Maybe we should start sort of at ground zero, so to speak, which is Argentina.
Argentina has a particularly important place in the world for protein meals and for oils. Historically, it's provided 50% of global trade. And that's a function of policy. The government of Argentina pursued industrial production versus the Brazilians who produce feedstock production. And so you have this massive infrastructure in Argentina to support global trade. And Argentina's entered into a doom loop. I write about it frequently, but it peaked 9 years ago in total production. And this past year lost 50% of the crop from original estimates. A 50% loss is catastrophic, the level that the world just doesn't experience in a primary origin. Maybe there could be crop losses in emerging markets, et cetera, that don't have the infrastructure, don't have the fertilization, don't have the irrigation to support a crop. But in a major global origin like Argentina, it's just astounding to lose 50% of a crop. So the USDA attaché at about this time last year estimated the crop to be about 51 million metric tons. And most analysts are 24 to 25 million metric tons. In the coming year, the USDA analysts have forecasted a recovery for Argentina towards a more normal production. If that doesn't happen, and Argentina is having a very significant change in weather patterns for the winter. They've been extremely warm. They've had 100-degree Fahrenheit temperatures over the last couple of weeks. And here we're talking about the end of July and the beginning of August. If Argentina doesn't normalize this year, in other words, goes into the 10th year of the doom loop, the implications for global protein meal supplies are incredibly significant.
And can you just, sorry, there's so much to unpack there. So, but firstly, what does that affect when it comes to supermarket shelves? When it comes to global food supply? I mean, just can you sort of contextualize that? Where would those that meal and oilseed oil ended up, and what does it mean kind of at the consumer level?
Well, the good news for the U.S. listeners is not much. That we're not an importer of Argentine meal; we're an exporter. The Brazilians are exporters as well, but for many other global destinations, including Europe, it's quite significant. It raises the price of a key feedstock, primarily for poultry and aquafeed, but also for swine, less so for cattle. But it is direct inflation in the feedstock for the global importer of historic global import of Argentine meal, who's producing poultry and fish. And that process of passing along the increase in prices from Argentina is certainly contributing to food inflation globally.
And has this crop failure been felt yet, or are we sort of in the period where right now it's starting to become apparent that it's not there?
Yeah, I mean, here I'll bring in Brazil. It's just amazing. At the same time that Argentina was having a catastrophic loss, Brazil and total soybean production was going to a record. And the Brazilians are really stepping up their total production and challenging the ability of their grain handling, their financial systems, and their logistical systems with just immense production. And that's something we can touch on maybe a bit later. But the Brazilians offset the Argentine losses, so the globe as a whole sort of got a flat result. If the Brazilians hadn't had the size crop that they had, we'd feel the impact a lot more. With the global trade and the global nature of trade in protein meals and vegetable oils, it all sort of worked out okay in the end because of the size of the Brazilian crop. The USDA particularly is forecasting normalization. And if normalization doesn't occur, or at least a step towards normalization in this coming year, it's going to be very hard for the global consumer not to begin to panic a bit.
Yeah, and this is part of kind of this first part we're talking about, which is global crop production is pretty much on the edge this year, and it could go quite dramatically south in a short amount of time, as some of the things you're going to lay out. But just because I think it's instructive, why was it down 50% in Argentina? Can you just give us some sense of how important weather is? And we'll come on to the US in a minute, but just staying on Argentina and Brazil, was it just the rains moved further north? I mean, what happened?
It was weather, but catastrophic losses don't occur like that with just adverse weather. We have adverse weather in many parts of the world, and we can observe the outcomes. So yes, weather for sure. That's the most heavily weighted factor in any crop year. That's the most heavily weighted factor. What's missing in Argentina, due to the incredibly difficult financial situation that the Argentines find themselves in, and that's policy and politics that I think for most consumers, they understand that's an ongoing challenge in Argentina. But that lends itself to limited investment in agriculture. And so the genetics in Argentina for soybeans, for instance, are at least a decade old. It's just amazing to me the pictures I see from Argentina and really how decrepit the entire system has become. So process around seed technology is so important. It drives global increases in yield. We can see that in the United States. We can see that in Brazil on a like-for-like basis with soybean production. Those genetics are missing. Fertilization is missing due to the weakness in the peso relative to global fertilizer prices, and then overcoming the adverse weather that you're talking about, stabilizing crop production via irrigation is super important. I think a lot of people who are not as deeply involved in agriculture as I am don't understand the role of irrigation. It's incredibly important. And when those systems decay, when those systems atrophy to the extent that they have in Argentina, it lends itself to a crop disaster along the lines of a 50% loss in total production that we just don't see in other places of the world who have periods of time or regions. For instance, the United States, we had some regions in the United States that for a time period had equally adverse weather as Argentina experienced last year. And we'll see what the yields look like at the end of this crop year, but it won't come anywhere close to a 50% loss.
Yeah. Let's turn to the US before we sort of move on to a couple of the wild cards here. And all this ties up into what feedstocks might look like for biofuels and that food for fuel story, how that looks potentially next year. So the US, we're coming up to harvest. It's been a really dry, hot summer in some regions. Where do we stand in both, I guess, on the grain side, but also on the soy side?
Yeah, I'll start with the soy side. We really determine the crop for soybeans in the months of August and September. That's the key yield determinant period. And we had a complete change in weather in the United States in July. About the second week of July, we had a system in place in what are called the I states, the key states. So Illinois, Iowa, Indiana, certainly those are key. There's Nebraska, Minnesota, and others, but the I state drought was the focus of the market, and it was akin to the last great drought in the United States, which was 2012. So we were on the path to what appeared to be a very adverse summer season, and it changed. And that ultimately will rescue the soybean crop from the I think worst recorded crop condition ratings in the history of the United States. I think that's right, Paul. If not, it was second worst. Soybeans are an incredible crop under very adverse conditions. They literally will shut down. They'll go into a reserve mode, a dormancy mode under extremely hot, dry conditions and wait. And when the rains come, the way that the plant recovers, it's a miracle to watch. That is not the case for corn. Corn has a very, very narrow. It's one of the Achilles heels of the corn crop. It has a very narrow yield determinant period, and that's about a 14-day period that normally is somewhere between the first and the third week of July. And during that period, we did have adverse conditions. That impact is being measured right now. There's crop scouts out in the fields. They can make estimations because the yield determinant period for corn has ended. And there's some pluses and minuses that will occur from this point to harvest with a few timely rains or very dry conditions that sort of reduce what's already there. But the yield determinant period for all intents purposes is complete. And while the USDA issued a number last week for the August crop report that suggested an okay crop, the reality is a lot of private forecasters who, again, are out in the fields right now are calling into question what the USDA suggested the crop would be. So my presentation to people who've asked me for my opinion on the crop is the August crop estimate for corn is probably the best crop estimate for the year that we're going to see. And each subsequent crop estimate is going to decline. Mm. And alternatively, for soybeans, the August is probably the lowest crop estimate we're going to see because the weather has just been so good. And in each subsequent crop report is going to increase. Where the offset is, I want to circle back to Brazil. The Brazilians grew such an enormous crop, and the year-on-year increase was so large that logistically they just couldn't handle it. And so it's stacked up at the ports and internally as they're trying to execute their program. So the Brazilians will take some of the pressure off prices and supplies of a declining U.S. crop because they've got such a large crop, both for corn. Primarily, they're going to help us out on corn, but they still have a very large soybean crop that's still being distributed into global markets, primarily China, and that is helping. So we talk about in the grain trade, large crops have long tails. In other words, you move in beyond your normal seasonal end of the marketing pattern. And that's what we're experiencing in global trade right now. So Brazil, both the record corn and soybean crops have sort of kept a lid on a simmering pot.
Yeah. So basically Brazil's kind of saved the day. The picture in Argentina is terrible. The picture in the US has been rough. And all of this has downstream impacts over the next few months and year on both obviously food and vegetable oil, but also biofuels. The black swan in this sort of like, it's not actually even a black swan because it's not necessarily that unlikely, is obviously Ukraine and Russia. Ukraine is an incredibly fertile region, and it's incredibly important for global grain supplies. Where does, I dread to think what would happen if a tactical nuke went off there and shut it down for a very long time. What's sort of going on there, and how, obviously the grain's now being embargoed. I mean, how important is that when you look forward to prices in the near and medium term?
It's so important. And I'm just shocked at the market's response to all the developments. I've been at my career for 36 years, and I cannot recall a time when strategic export infrastructure of food to very needy people in the world was under attack and bombed and rendered useless, and global markets didn't have a significant change in price. I mean, what has occurred in the Ukraine? First of all, it's fascinating to me. I'm sure there'll be books and all sorts of historical documentation of the way that the Ukrainian farmer has still continued to farm in the midst of a war going on. That's incredible to me, and it speaks to their courage that they've done that, and with a driver I would suspect not only of making money and keeping their farms intact, et cetera, but their responsibility to the globe in food production. But I wake up every morning and look at markets and just think to myself, how in God's name are we at this price with what's going on? An incredibly important origin in the world for food for the poorest of the poor countries in the world. It's astounding. It's absolutely astounding to me that the markets are as complacent as they are. And the specter of a tactical nuclear weapon. I don't know if you can ever talk about a small nuclear event or not. I don't think that's possible. But contaminating some of the most fertile ground in the world, the historic breadbasket of the world, rendering it useless for generations it's frightening to think about.
So, I mean, get your comments on China as well. I mean, I would agree with you, by the way. And also, it's important to say that a significant portion of that farmland is being mined, has been mined, and is not going to get back to useful production for quite some time. And I would echo what you said on the bravery of Ukrainian farmers. There's also been kind of this idea that, and I guess this is what's kind of in the background of this conversation, is when you start having with such a variable climate, with more and more extremes of temperature, rainfall on either side of that scale coming along, there is kind of this growing view of you could have a year when every region has a disrupted harvest, which would have profound impacts on global food supply. Is that something that is very unlikely? Is that something that we could have gotten close to this year without Brazil? I mean, can you just talk to that? And what, when you talk about how complacent the market potentially is, what kind of price rise could you see?
The scenario that you lay out it's tough to imagine that every major origin in the world has an adverse growing season in a same crop year or sequentially two crop years. That's difficult to imagine. It's really one of the amazing elements of global food security is the growth in the southern hemisphere that allows the northern hemisphere to have a challenging season, and then vice versa, where the northern hemisphere can make up for losses in the southern hemisphere. So from a global security perspective, that's difficult to imagine, and it really is beneficial to humanity, the build out in Brazil specifically, who's just been able to achieve levels of production that I think no one would have imagined 5 years ago, boosting global food security. And the other one, and here it's going to be considered a bit controversial, I'm sure, by some of your listeners. But when we talk about biofuels, specifically U.S. biofuels, and the enormous demand that biofuels put on our crop production, in effect, that acts as a reserve. Let's take corn ethanol, for example. The ethanol industry consumes 40% of the crop. And with each year, as corn yields generally trend higher and we produce more, that percentage has slowly but surely been going lower. But the reality is it's still an enormous amount of food. And should an event, and we've had stress tests on this back in 2012, which was an extreme weather event. But should a global event occur, it's very easy for the ethanol industry, as an example, to just wind down, to just turn the machine off. And when that occurs, it's an enormous amount of food that falls to the bottom line, more than the world can consume. And industrial consumption is far beyond what any human being could, or collection of human beings could consume in a given year. So if you look at biofuels policy from a different perspective, whether you're pro or against, one of the outcomes is an incredible source of food that can come back onto the global markets as food and not fuel, with simply going from on to off. It's just that fast. And in 2012, when we had a very adverse growing season in the United States, that's in effect what happened. So if you now take that globally, across biofuels globally, and one of the big ones, and one of the real changes is going on in Indonesia, with Indonesia running headlong at higher and higher blends of palm oil into their domestic consumption. Indonesia is by far the world's largest palm producer, which is by far the world's most important vegetable oil. There's global policy that in effect can be turned off in short order, or at a minimum turned down, that brings so much food back on the balance
How does
sheet.
that happen? Sorry, like, is this just simply that prices for food go up so much that it gets directed towards that, or would this be a government intervention? I mean, how would that actually take place? Let's say next year Argentina doesn't normalize, Brazil doesn't have a good year, the US, and suddenly you see a rapid demand, rapid price increase, and just tell me how. I think that's instructive to understand how that would happen.
Yeah, it would be a little bit of both. In the case of 2012, it was just the profitability for producing ethanol just collapsed, and so the losses that would be realized if an ethanol company continued operating were extreme, right? So an extreme message was sent. There was no need for the EPA or the executive branch of the government to get involved and just say stop. By fiat, we're ending policy. But you could imagine globally that two-part way of doing that probably leans more to government fiat than it does to prices. Prices will get to a point that populations get destabilized, crowds are forming, rocks are being picked up, and the government says, okay, that's it, right? Enough of this. And we've seen that across multiple countries this year, where government intervened, not so much to end biofuels policy, but to stop the rise of inflation when, as I said, the crowds were still forming. They were getting close to picking up the rocks to start throwing. But it will be in my estimation, globally, it will be fiat that causes that change.
Because the biofuels market is in a very different world to when it was in 2012, right? Which was primarily ethanol. Now
Yes.
you've got so much capital has flowed into processing, into refineries around renewable diesel, sustainable aviation fuel, biodiesel, and so forth. And I assume a lot of those, as they would want, a lot of those feedstock supplies have been put into long-term supply deals. And it's not like they can the producer, the agri houses, the farmers, whatever, can just switch those contracts off, right? I mean, just saying, it's, I would imagine that it would be required that it's fiat, otherwise you'd have a hell of a lot of lawsuits.
Right. Well, yes, exactly. You absolutely would. And the fiat and what comes with it as a response to farmers who obviously are going to feel a lot of suffering from the price drop that would occur with fiat is also going to bring the government in the other door to try to solve the problem. The reality is that biofuels are blended into a primary petroleum-based fuel. And the reality is that those blend rates are, while consequential, for instance, ethanol in the United States with a 10% blend and an ability to go to a 15% blend that the industry can support, it's still 85% petroleum based and can go back to 100% petroleum in very short order. Now with market signals, I'm not dismissing the fact that puts a stress now on the petroleum producers and gasoline supplies. If you have 10% blend and because of prices or fiat of some sort, you take away that 10% at the margin, that's extremely impactful to gasoline supplies. But you have the supply, right?
Yeah.
And that's the reality, that biofuels are replacing incrementally petroleum-based feedstocks or petroleum-based fuels, and that can be reversed fairly quickly. Again, notwithstanding the market signals and the tumult that goes and the volatility that goes along with it, it can still be accomplished.
The HC Insider podcast is brought to you by HC Group, a retained search, intelligence and advisory firm focused solely on the global energy and commodity sector. With 6 locations across Asia, Europe and the Americas, and over 50 consultants. To find out more, go to our website, hcgroup.global. There, you can also sign up for our HC Insider content for more interviews and white papers on relevant trends and talent impacts in the commodities world.
This is so crucial, though, because we had Michael Bernard on talking about the future of transportation, and the ultimate thesis was electrification of everything, and where it was hard to electrify, you would be using biofuels, for example, aviation, and we've had Steve Moore on talking about sustainable aviation fuel. But it is crucial to the energy transition pathway. It's sort of the god of the gaps in some ways, how it's applied. We can do biofuels there.
Yeah.
But I mean,
especially in regards to sustainable aviation fuel, it's the only pathway.
I mean, I think they're saying 50%, and the rest is sort of other technologies, right, and offsets. But
right.
My point being, we're already, you can argue we're in a stressed point today, and were it come down to it, the crops go to food, of course, not least, as they should. When you talk to the energy companies who are the prime movers in this, who are investing a significant amount of money, is there the understanding that they face this fiat risk, they face this government intervention risk, they face this environmental risk, and we know that it's already to some extent stressed? I mean, how prevalent is that understanding there? This is not like an oil well where, it flows come what may. This is very much, we're talking crop cycles and we're talking weather here.
Yeah, and that's amazing. That's amazing to me in my journeys with the petroleum industry, whether it's refining or fuel companies, et cetera, is quite frankly how little they understand that. And it comes from, as you said, the petroleum industry uses their technology to look underground, and they can see a pool of oil, and they can calculate the price that it will take to extract it, but they know it's there. And they face an industry that, on our side, on the agricultural biofuel industry, where we get up and check the Weather Channel at 5:30 every morning and change our opinion about what the crop size is. Extreme volatility around price discovery, around crop size discovery, et cetera, et cetera. It really, in my opinion, hasn't morphed into something more predictable with satellite technology and gene genetics around crops and the predictability of the seed producers to tell us exactly what we're going to get for a crop size. So there's still a lot of volatility around that discovery. And sometimes we really, as with soybeans, we may not know till well into the crop cycle what a range of the crop is, but we still all wait for the combines to run through the rows and tell us what's in the field. And the petroleum industry and the fuel industry, I still don't think, as they get more involved in these businesses, they understand how quickly prices can change the available supply of the biofuel. You know, as we said, one more it doesn't even need to be a nuclear event, but one more event in Ukraine just shutting down global exports from there with the switch back to the U.S. would put extreme pressure on feedstock prices and change economic calculations. Quite literally, in 5 business days, the calculation can go from what appears to be a very profitable quarter to something that looks awful. And that understanding, I think, is missing on the petroleum, on the blender side, on those who buy biofuels for blend into petroleum-based feedstocks. We just don't know the supply, and then we don't know the supply until the crop is harvested. And then in regards to increasing predictability around judging that or estimating that, I've been at this 36 years. I don't see tremendous improvement.
I think it's fair to say, from our perspective, I think the more forward-leaning refiners, fuels companies, are hiring quite heavily from the ag sector, right? Both at the leadership level and at the analyst and trading level, to bring in that expertise and understanding. I think there's, how that translates culturally through the rest of the organization can be a challenge, but I think there is a recognition there, and we're increasingly seeing that, rather than it just being your sort of head of, whatever it might be, products moving into these types of roles. I think there's an increasing, at least in certain organizations that we're working, we've made a healthy few years placing ags people into the energy markets, and and obviously the energy world is a richer space in many ways, which is attractive to ag talent, and you and I have had that discussion offline.
And it should go that way. It should go that way. I don't expect a lifelong petroleum person to understand the corn cycle, and it's difficult enough for those of us who've been doing it a long time. So start with somebody who's been doing it for a while and help get the organization up to speed, for sure.
Yeah. Okay, but this nicely segues into the EPA. So we've done it for 30 minutes. We're talking about the real backdrop to biofuels, which is just, I guess, giving some slice of view on how variable and somewhat fragile some of these, this feedstocks piece can be, especially when you throw in all the major trends of this podcast since day one: deglobalization, energy transition, and digitization and volatility and so forth. But the EPA and other, we're right back, as with many things in the energy transition, you are at the behest of regulators, policy, and we've got this sort of really interesting scenario where the administration in the US is, and this is consequential globally, so I think it's worthwhile talking about it, is obviously very pro biofuels, where the EPA, the administrative body, has sort of somewhat gone in a different way in its recent RVO. Can you just tell us what the RVO is, what it says, and why this is somewhat surprising?
The EPA took over basically the RVO, just in general being the fuel blending or biofuel blending policy for a period of 3 years, from 2023 through 2025. And this was envisioned early on in legislation, that there would be a transition from Congress to the EPA. And so the EPA, from the perspective of those of us in the biofuels business, threw a dripping wet blanket on the fire that was the build out for renewable diesel, which has just had incredible momentum, both from the feedstock producers, so primarily in the United States, the soy processor, and then from the refiner or fuel producer. So we had this over the last number of years. We've had Marathon combining with ADM, Phillips 66 combining with a co-op in Iowa, and then this blockbuster deal between Bunge and Chevron. And so for the first time in my career, we had these refining companies entering into soy processing. And that's a level of cooperation and handshaking that we never experienced in the ethanol industry, where it was a very adverse mandated fuel that quite frankly, the refiners didn't like the fuel. It had to be identity preserved. It had different logistics, different requirements logistically, couldn't be put in a pipeline, the same for biodiesel. But along comes renewable diesel, and the refining industry embraces it. So we've got the soy processing industry in the U.S. announcing anywhere by a range of calculations from 30 to 40% increase in capacity. And you have the refining industry partnering with and financing many of these projects. And the momentum is going tremendously. And we're waiting for the EPA last November, that's November or December of 22, waiting for the EPA to give us an early indication. And they throw the wet blanket on the fire. Literally, they said current capacity suffices. So that's not the built out projection, but at current capacity suffices for the next 3 years. When tally up all of the projects that had been announced, both in producing renewable diesel and in soy processing, there was nearly 2 times as much capacity already forecasted, already announced. And it was the strangest event. Prices for soybean oil collapsed, for other vegetable oils followed soybean oil sharply lower. And it was a perspective that I think across my peer group in agriculture and many I speak to in the fuel industry, a sort of what the heck was that? Yeah, I mean, no one saw that coming. Universally across my peer group and others that I speak with, there wasn't somebody who sort of had, there was some sense this was coming. There was no sense this was coming. It just did not make sense relative to an Inflation Reduction Act that had set out these expansive goals around biofuels, particularly around sustainable aviation fuel and what the country would need to achieve. And so you have the executive branch of the government on the one hand cheerleading biofuels, setting out expansive, grandiose plans, and then the EPA comes in and says, no, we have all we need right now, full stop.
What was the alternative? Were people expecting, mandates like in ethanol blending? How did that translate into sort of what was missing in terms of concrete policy that caused those price collapses?
Well, I think it was just support. It was the regulator in effect saying full stop. I'll credit Randy Stewie for this one, the CEO of Darling. He made the compelling case that the U.S. ethanol industry likely has to get growing again, and renewable diesel has to continue on this pace of growth to achieve these outcomes. And without that, the Inflation Reduction Act and the blend of biofuels into sustainable aviation fuel, and you have to remember, round numbers, a sustainable aviation fuel is 8 to 10, depending if you include defense and some of the large carriers like UPS or FedEx, to 12 times road fuel. I mean, it's enormous. And so for the EPA to stop any of the momentum rather than join the administration in cheerleading the growth, it's going to cause confusion. And so the market response was a dramatic decline in U.S. soybean oil prices. And strangely enough, the U.S., who needs to export nothing on soybean oil, we actually started exporting oil again. We actually started fixing sales, which was ironic that we can't afford to lose a single pound of soybean oil to global markets. And yet the EPA's announcement made the U.S. competitive again in global markets, which is all changed subsequently. And I'll get into that. But it lent itself to just immense confusion. And then the recovery was amazing. It was absolutely amazing to me, because I've never seen in my career where industry ignored policy. It basically, it's almost as if the industry said to the EPA, I'm moving forward without you. I really don't care what your 3-year period of control of this is going to be. I'll go with the Inflation Reduction Act long-term view. And so the whole process in public earnings calls, et cetera, was CEOs expressing damn the torpedoes, full speed ahead response to the EPA. And prices have recovered. Additional projects have been announced, and it's like that very bad period in November, December is over. And I'm just amazed how the market is now ignoring this 3-year time period and really looking towards decades of demand from sustainable aviation fuel.
Yeah, it's interesting, isn't it? Because as you say, industry is ahead of the regulator, is ahead of policy in this and pushing forwards and trying to keep this on a global level, and there's similar globally. Why do you think that is? Is that because you've got obviously the SEC proposed disclosures? We did an episode on that earlier in the year with Julie McLaughlin, which was going to require public companies to start, their scope all the way down to scope 3. So, they are going to really start caring about their supply chains and reporting it. But I guess it all ends up at this idea. There's either going to be some carbon taxes or carbon credits mandated globally or mandated much more broadly than they are at the moment. But I guess even then, it still ends up at this idea that the consumer is going to click that button when they book their flight that says offset my carbon, right? Or consumers are going to be willing to spend more on choosing sustainable fuel over conventional fuel. And as you and I discussed offline, it's an interesting episode coming up with the head of a large retailer who just is saying that that's just not the case. They're just not seeing those behaviors yet. I mean, why do you think industry is so far ahead?
Yeah, I think it's two parts. So we'll start with that one. I think there's a sense that any recovery in perspective on what fossil fuels are needs to begin with a biofuels element. So while some of the challenges for alternative fuels and for electrification have been laid out by some of your fascinating pods with those in the know who are laying out the case for limited resources and metals, et cetera, to achieve complete electrification. I think there's a sense from the refining side that we still have to make this while the consumer is going to unfortunately discover that electrification isn't there and is going to have to swing their perspective back to petroleum. It's still going to have to look very attractive. So I think there is an element of appeal to the retailer and especially younger generations that's how this plays out. If electrification doesn't occur, then it will be a swing back to looking at petroleum and saying, what more can you be doing? And so they're adopting these policies as permanent. And then the second thing is it's so much work to get to where the industry would need to be to serve the blend rates and sustainable aviation fuel that are proposed. And I think it was Mike Wirth, the CEO at Chevron, who in response to a question about this RVO and the EPA said something like Chevron thinks in decades, not in 3-year increments. So they have a lot of work to do and they've got to get going. And so I think a big part of this is just the work to do. Again, aviation fuels at 8 to 12 times road fuel demand. It's hard to get your head around how big those numbers are. If the refining industry is going to be impactful, they've got to start pouring concrete and laying rebar and getting going, and they're just not going to wait.
And finding partners, right? There's
right.
This is a consolidated commodities sector right now. Normally, when you've had a long, a period like we have, although it's cooled this year, rising prices, we see a lot more new entrants, startups, and so forth. We're just not seeing that, right? The commodities world, whether it's ags, energies, or metals, is incredibly consolidated, in part because of the rising costs and barriers to entry around finance, around regulation, around compliance, and so forth, and also fundamentally a very limited talent pool. And so there are only so many partners you can go out there and hook up with if you're an energy company, and vice versa, right?
Yeah, and the spike in inflation that we talked about and its impact on the consumer, that's relatively new, right? So we were at zero interest rate policy for a very long time and stable prices, and so I'll put them under the big rubric of green ambitions. We're moving forward. And maybe now the reality check for the consumer has been, these things are very expensive and I can't afford them.
Yeah, which kind of it's that feedback loop as well, isn't it? I mean, that's the point that this individual made, and we'll be having them on the podcast later in the year. But you've got all of this, your upstream supply chain has got all this pressure to decarbonize, but when it comes down to the final consumer, it's stressed by inflation. You don't really care where your olive oil came from. If you can't afford, first virgin olive oil, you're not going to pay an extra dollar for it also to be carbon free, right? I mean, that's just seems to be the case. And part of that is the urgency of the problem, right? We're talking about an externality. What can I do when, X country over there is producing 100 times more than we are, et cetera, et cetera. But I guess another story. But you've I guess that's why we're calling this episode Biofuels on the Edge, is you've got sort of these multiple pressures. You've got a clear realization that over the long term, they are going to play a crucial role. They must do, especially sustainable aviation fuel, as you say. But you've got this huge amount of uncertainty from the regulatory side. Okay, the market's recovered, but I'm sure that cost some people their jobs if they were on the wrong side of that dramatic move. But overall, you've got regulatory uncertainty, both a patchwork globally as well as changing administrations, changing goals. And then you've also got the fact that these are crops. And as we've spent the first part of the episode on, you've got a really on the edge year, and one that, yes, everything tends towards the normal, but it doesn't have to. In a 2-year back-to-back cycle has profound impacts. And then you throw in deglobalization, wars, and all the rest of it. It's a tough place if you're on the investment committee for looking at a biofuels play, I imagine.
It is. I keep thinking about Adam Rosenzweig and the idea of peak energy or peak cheap energy. Every time, I've told you I've listened to that pod 5 times. It's just fascinating, the case that he lays out for the fact that we've seen the peak in certain places, like the Bakken Shale, and there's new evidence that the Permian is peaking. And the U.S., as he points out, has just been this enormous engine for growth in petroleum production, more so than any other place in the world. And so to have signs of a peak from the global, we'll call it the global engine for petroleum production, beginning to slow, that's a big one, right? That's a big economic driver. And so one of the elements of biofuels that could evolve is just petroleum increases in prices dramatically, and all of a sudden the profitability of producing biofuels, and in my world, agricultural biofuels becomes very profitable. And that's a specter that, again, I've listened to Adam 5 times. It's such a great episode. I absolutely love it. He makes such clear and compelling cases for what the world is up against from energy, and in the case that he makes around the importance of energy to civilization. It's fascinating. But if we are at peak petroleum, then all of a sudden biofuels are going to start making a lot of sense, just in making a contribution to total fuel supply.
Episode 140 of the HC Insider podcast, for those that are interested. And yes, I think it's one of our most popular episodes. Well, in the same sense that you're fascinated by that episode, I often turn to you for understanding on the biofuel space, and we have a lot of great conversations. Let's end up here. So, given all that we've just discussed, what are you working on at the moment?
The world needs vegetable protein meal. It's the tailwind in global agriculture. And so, the first thing that happens, I think we talked about this in the first episode that we did together. The first thing that happens is global GDP expands and population expands is a demand on meat supply. When GDP increases, people consume more protein. That's universal. It doesn't matter location, it doesn't matter religion, it doesn't matter culture. That's what happens. So as a vegetable protein meal industry, we have to grow to meet global demand. And as we're doing that, it just so happens that along comes renewable diesel policy to support that for the oil. But when we're making the oil, we're producing the meal. So it's a policy that is having a very positive outcome for global food security, it's unintended positive consequence. So I work with investors and others to build out the capacity in the United States. I'm fascinated right now with processing capacity for some of the alternative non-food oil seeds that the refining industry would like to see developed. And it's only going to be developed if the farmer grower has an opportunity to deliver that crop, whether it's camelina, carinata, or cress seeds, cover cress is Chevron and Bunge have invested in. There has to be capacity. And today that capacity doesn't exist. And that's been a big focus of mine in the last 6 months.
Well, Walter, it's been a fascinating discussion. I know people can reach out to you on LinkedIn, and you publish a weekly thought piece on what's going on in the market, which I'm sure deserves a much broader audience given your experience globally in these markets. And interesting, right? I think it's fascinating to sort of get an update on where things stand, and it's a complex picture out there as we've described, and hopefully some of the dramatic downsides don't appear.
Absolutely. We don't want those dramatic downsides. But thank you, Paul. Thank you very much for the opportunity.
Thank you for listening. If you enjoyed this episode and want to support the show, please give us a positive review on Apple Podcasts or Spotify.
To find out more about HC Insider and HC Group, a search and advisory firm dedicated to the commodity markets, visit our website at www.hcgroup.global. There you can find out more about our services and our offices around the world. There you can also find more content, from interviews to insight pieces to more podcasts focused on the commodity value chains. Thanks again for listening.